The Australian property market has broken new records, and many people are starting to ask, have I missed out? Should I wait until interest rates fall? And I get it, because if you look at the headlines, it makes it seem like the property market has already peaked. But based on my now 23 years of investing experience, what I can tell you is that the very part of the property investing cycle we're in right now, this is a real watershed moment, and it's a moment that many people get wrong. And the cost of getting it wrong, they don't realize it for many years, and it's way more expensive than they ever imagined. That's why in today's episode, I'm going to talk about what's really happening in the property market. Let's go behind the headlines and how you can position yourself for what's coming next. Let's begin by looking at what's already happening in the property market, because this next property boom that you might be hearing about, it's not something to wait and watch for. It's already started. Here we have data from CoreLogic, which shows that Australian dwelling values rose another 0.5% in May, taking the national index 1.7% higher over the first 5 months of the year. But it's what I'm about to say next that should really get you thinking. The gains were broad-based, with every capital city posting a rise of at least 0.4% through the month. Now, why does that matter? Well, do you remember when the last time was that every single capital city recorded a rise? It was back in 2021. And do you remember what property prices did in multiple areas around the country back in 2021? They rose by 20% or more. And we're seeing multiple factors, as I'm about to outline, that show that we could see similar price rises across different areas in the country. The continued momentum we're seeing across all markets is no doubt being fueled by rate cuts, both those that have already happened but also potential cuts in the coming months, said Tim Lawless, Cotality's research director, who also noted that auction clearance rates have picked up following the RBA's May board meeting. And I've spoken about this in multiple episodes in the past. Whenever we see, especially in our more auction-heavy markets, auction clearance rates start to rise, data from the last 30, even 40 years shows that property prices always rise shortly afterwards. So we're starting to see multiple indicators that show us that a property price uplift is well and truly underway. But that does not mean that every area is rising equally. If we look at this chart from Cotality, we can see that every capital city, yes, it rose in value, but different areas are performing differently. Darwin for the month of May had by far and away the strongest growth, but even many of our regional markets are also growing as well. Now, when you see data like this showing that pretty much every single macro market around the country is rising in value, many people, they will just see these headlines and they will rush in blindly and buy anywhere. A client recently told us about this story of their friend back in 2021, when again the market was similarly poised to where it is right now. Prices were rising across multiple areas around the country. They thought, how hard can it be to buy a property? Let's just buy a property in an area we know. Let's buy what they considered a good quality property and they would be fine. What happened? Well, 4 years later, their property has risen all of just $15,000. Now, that's not enough for them to even cover their stamp duty if they decided to sell. Meanwhile, many of our clients bought properties in areas that rose anywhere from $200,000 to $300,000. So the biggest loss and what really stings for that particular couple is not the small $15,000 that they gained, but the actual $200,000 to $300,000 of capital gain they missed out on by choosing to buy in the wrong area. So if you're someone who's serious about building wealth through property investment and you want to work out how do you identify the best areas to buy in for consistent long-term growth, then check out the link in the description where you can get totally for free the audio version, and digital version of my book where I walk you through our proven criteria on how to find the best areas for strong capital growth and also where you can get your property rented very easily. So now we know that prices are rising around the country. But the next question is, well, how much further can they rise? After all, property is considered quite expensive in Australia. And again, this is another mistake I see many people make. They think, oh, we've had prices rise a little bit. That's as far as they're going to go. Let's not bother getting into the property market. But the data actually points to something very different. History suggests that once rates start falling, property prices don't wait around. Bank of Queensland Chief Economist Peter Monkton has crunched 4 decades of data. That's 40 years worth of data. And he says a 10 to 15% rise over the next 2 years is a reasonable bet, no matter how many cuts our RBA governor ends up giving us. Now, he's talking about a 10 to 15% price rise in the Australian median property price. What that means is some areas will not perform that well, but other areas will far outperform this 10 to 15% growth. I'm personally seeing a lot of areas around the country where I think prices could easily rise 20% or more in the next 12 to 24 months, just like we saw back in 2021. And that's one reason why I'm personally looking to, as aggressively as I possibly can, grow my property portfolio myself this year, because I am so excited by what the data shows. But it's not just me who's predicting steep price rises across the country. Property prices could rise by $141,000 with RBA rate cuts. Home prices are set to surge by up to 12% in the next 2 years if the official interest rate is cut by the predicted 1.5% by early 2026. A further 12% on top of today's prices means an extra $141,000 added to the combined capital's median house price, taking it to $1.32 million using domain data. Sydney would be just shy of $1.9 million, Brisbane would hit $1.145 million, and Melbourne would reach $1.16 million. But remember, it's not just interest rate cuts that are fueling this next property price uplift. Also, the government is really pouring fuel onto the fire with its policy to give all first home buyers access to 5% deposits without lender's mortgage insurance from January 1st, which should push up prices at the lower end of the market too. And I'm seeing that already in multiple areas around the country where properties are priced, say, between $600,000 and $900,000. Those areas are moving far more quickly than, say, more expensive markets, which is great if you're someone who is a little bit risk averse. You want to buy property for, say, less than $1 million. You have an opportunity to get into the market now and see some substantial price growth. And also, these are areas where you will have very little, if any, trouble getting your property rented out quickly, and your rental income will also rise over the coming years. The fact is, every time we have seen this combination play out in the past, strong demand, limited supply, and falling interest rates, property prices have taken off. And the data clearly shows that we're just at the start of this next growth phase. But we've already seen the impact of just one rate cut on the property market. Since the rate cut in February, property prices have risen in multiple areas around the country. It's like it's rekindled the property market. Property prices have lifted considerably in some markets since the interest rate cut in February. This is the key thing. It's in some markets. As I said earlier on, you just can't go and buy blindly. You still need to do your due diligence. Not every area is going to outperform. This article then goes on to talk about some of the areas that have really started to perform well since the rate cut in February, namely certain pockets in Melbourne, some of the areas in regional Queensland, plus a number of others. And while you might think house prices are already expensive in multiple areas around the country, here's the other reason why prices are likely to continue to rise and rise steeply. Australia's housing shortage has taken another turn, with new data from the Australian Bureau of Statistics showing a sharp decline in overall dwelling approvals. Yes, at a time when demand is rising, supply is actually falling. And as my economics professor would say, whenever you have demand rising, supply falling, prices are set to rise. The ABS figures released on Thursday reveal the total number of dwellings approved in April fell by 5.7% to 14,633. Now, why is that number so important? Well, the federal Labor government has this goal of building 1.2 million homes over 5 years. So let's break that down. 1.2 million homes over 5 years means 240,000 homes per year or 20,000 homes per month. And here we are falling away from that target. We're only building 14,633 properties last month. So therefore, we're actually falling further and further behind target, which means the supply shortages that we have in this country are only going to get bigger and bigger, fueling further property price rises. And fixing this construction issue is not something that's going to be easily done. Construction costs are blowing out, there are too many delays, and people are more and more scared about entering a construction project because they don't know when their property is going to be finished and how much extra it might cost them, especially as many builders now are saying they won't do what's known as a fixed price contract. So can you imagine this? You want to build a property, but the builder won't actually tell you how much it's going to cost you in advance. I'm not blaming the building industry, but that's the reality for many people when they're looking to enter a construction contract. They just don't know how much it's going to cost them, which is too risky. So people are less and less likely to want to build, which is going to then move more of that demand onto areas where there are established properties that are already built, which will force prices up in those areas. And look, if you're not sure how to do all this on your own, how to identify the right areas for you to invest in, and you have some equity sitting in your property, or you have some savings and sufficient borrowing capacity, feel free to book in a call with a member of our team to see if what we do can help you. Because for countless clients, we have helped them build property portfolios that will help them get ahead faster without the stress, and for many of them, without even needing to leave the comfort of their own homes. But ultimately, all of this data on a nationwide basis points towards property prices rising in multiple areas around the country. I think the worst thing anybody could do is kind of sit out of the market if they could afford to buy, put their head in the sand, kind of say, well, this is all too complicated, I'm not going to worry about it, and then look back with regret. Instead, do your due diligence or get the right professional help. And what you could find is that property investing could not just be very lucrative for you, but could also be very, very safe. So you've seen all the data, but there are further rate cuts expected to come. What will that do to the property market? Should you wait until those rate cuts before you buy? Well, if you're still not sure about what's likely to happen to the property market when interest rates are cut, check out this latest video where I break it all down for you.